Hey traders, this is Steve Miley, Market Chartist for FX Explained. Here we're going to take a look at the DAX future in here, taking a focus on the European stock indices with a focus on the German index, the DAX, the future on the DAX market in here, the DAX index. And a strong recovery effort in here over the past week, really surging high at the beginning of this week. That was on the hopes of a COVID-19 vaccine alongside cooperation from France, Germany with respect to a European recovery fund. All of that pushing the market higher in here at the beginning of this week. Market did dip on Tuesday, but then a decent rebound yesterday to reverse Tuesday's losses. Leaves upside pressures intact. More recently up to this 11,246.5 level, just shy of the April peak in here at 11,337. In fact, all of the major European equity indices and also the US equity indices aiming at these peaks in here, if not through the peaks from late April. So if we take a look at, say, for example, the Euro stocks in here, again, up to 29.45 above this May peak, aiming now at this 30th of April cycle peak. If we jump to the FTSE, similar story there, up through the May peak, aiming at the late April peak. So all very solid within Europe, and a similar story if we go back to in here, the US actually getting above already this late April peak in here, just nudging above there and back venturing towards there yesterday, and again looking at there again this morning. Back to the DAX though, and yeah, an underlying positive theme in here. The other thing is we rejected, remember we had this kind of head and shoulders pattern forming here through late April, the first half of May, and that was confirmed with this sell-off in May down to 10,159. So we had that head and shoulders topping pattern, which then was completely rejected in here from the beginning of this week. So a rejection of a bearish pattern, a bullish statement in itself. So upside threat now back up to, as I say, this peak in here from late April, 11,337. Now critically, that peak we pushed into this really important runaway gap, this bear gap. A runaway gap is a gap that comes in the middle of a trend, and here you saw the downtrend started in February, and then the real acceleration that we got through early March into mid-March in here when COVID-19 broke into Europe and the US in here. So that real bearish acceleration driven by this really important weekend gap in here from the it was from the 6th of March through into the 9th of March, and we went up into that gap. That gap was 11,092 to 11,417.5, a big gap. We got up into that gap at 11,337. Now if we close that gap, that runaway gap from the early March weekend in here up through 11,417.5, that would be a very positive statement on an intermediate term outlook. So upside risk on a short term basis to 11,337, critical is going to be 11,417.5, and potentially even higher targets as we go through this week into the late part of May. This has been Steve Miley, Market Chartist for FX Explained. I'm going to wish you all a great trading day and look after yourselves. Be safe out there.